Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope all of you had a very good day and a very beautiful week of trading as well. And in today's markets, guys, the bulls continue their advance forward. At this point, it's now been 10 days almost in a row of rally since we got that extreme flush after the Federal Reserve meeting on this day right here on July 31st. Just goes to show here, guys, the market is extremely data dependent right now. A lot of the bullishness from today was off the back of a Michigan consumer sentiment report that came in more favorable than expected. So you can obviously see what the data does to these markets. On this Thursday right here, or Wednesday rather, that was your Federal Reserve meeting where Jerome Powell finally hinted at the September rate cuts. Thursday right here was the less than favorable manufacturing report that really started the recession narrative at the first time, right? Here it is right there. Thursday, August 1st, manufacturing PMI coming in well under the expectation, showing economic contraction. Then we went into the next day, Friday, non-farm payrolls really coming down hard. You can see the number right here blatantly mixed the expectations and once again reiterated some recession fears, and then all unraveled, culminating into Monday with the Japanese carry trade unwinding as well, the Black Monday sell-off. So in 3 short days with negative data, we went down 7.75%. And in the past 2 weeks, we've gotten a slew of good data, contrasting the ones that we had about 2 weeks ago. All of the data, especially the data this week, has been relatively good, which is why the markets continue their advance. So in today's video, guys, a lot of things to cover. Number one, we're going to be going over that consumer sentiment data that came out of the University of Michigan and determine whether or not the consumers are still favorable towards the economy or whether or not they're still feeling a bit of the pinch of high interest rates. Number two, we're going to be going over our major technical analysis rundown of our major market indexes, followed by our major big tech names, and see whether or not there are some still good deals in the market and whether or not it's a good proposition to be buying at the peak of the 10-day rally right here, not only in the indexes, but also in individual names that might have rallied as well. Thereafter, we're going to take a brief look into my portfolio for trades made over the course of the week, everything I closed today, and what we have leading into next week as well. And finally, to cap it all off, guys, we're going to go through a little bit of a list right here. We're going to go over my high conviction, high quality stock list. We're going to try and cover as many of these names as possible, and I will be telling you whether or not I think it's a good swing trade for myself personally, depending on the levels where they're at. So we're going to try to get through as many names on this list as possible in 10 minutes worth of time. So just to give you guys an idea of how I search for trades, what my filtering process is, and just how easy it is to find swing trade setups on high quality names. So a lot to cover in today's video, guys. Let's jump right into it. SPY up about 0.22%. Good day for them. QQQ also up 0.13%. Not the biggest increases that we've been seeing over the past couple of weeks, but indeed the market was still green. Take a look at the heat map right here. You'll see that even better. No real massive bright green in the markets, but also no really massive bright red. Very, very decent market here today, but nothing to really scream home about, right? Big tech, fairly mixed across the board. Semiconductors as well, fairly mixed. NVIDIA kind of carrying the index right there. Financials had a decent day. Healthcare very mixed as well. And the bottom half of the market too. Quite a mixed session to say the least. No clear direction. It was slightly bullish, but I would say equidistant amount of names that were up, then down. Moving on further into the 1 week relative, guys, in the 1 day, you will see that, yes, we did have a lot more gains than losses on the market, but no really substantial bright green gains, right? A lot of the sectors were up, but real estate, healthcare, and industrials pulling back ever so slightly. On the 1 week relative, guys, well, after 10 days of rally, you would expect that everything is green, and that is indeed the case, led by technology and consumer cyclical, 2 of the sectors that got hit the hardest in the sell-offs of the last 2-3 weeks. And on your 1 month relative performance, guys, still a very mixed market, right? Utilities, healthcare, defensives, and real estate, still your market leaders. And to the downside, communication services, energy, consumer cyclicals, technology, industrials, and basic materials. Very, very mixed market as a whole. There are still a ton of deals out there, guys, right? And I go through a lot of them in the daily market recap videos, the top 5 options plays videos, and you can even see a lot of the plays that I'm taking in my portfolio section at the end of each one of these videos, Monday through Friday, to give you even more ideas of what I'm trading. So before we get into more technical analysis, guys, let's go over that Consumer of Michigan survey and determine whether or not the consumers are relatively healthy right now. So as we can see right, we do have the, which came out right now, Michigan Consumer Sentiment Index coming in at 67.8 versus the 66.9 expected. That was fairly good here, guys, as a whole. And I think, unfortunately, I did close my page. Let me just try and get it back. Oh, no, it's right here. My bad. So here is your Michigan Consumer Sentiment. You can see that since the start of 2024, we have been getting worse and worse and worse because consumers still feel the pinch of high interest rates and relatively high prices as a result of the inflation that we had over the last 2 years. Now we are potentially seeing a little bit of an inflection point. Now, well, I'm not saying that one piece of data is enough to gauge a trend, but at least we're not falling lower than we were in July, right? So this is actually the first month being positive in the last 5 months worth of data. Now, admittedly, guys, this survey is not too large. Usually they survey between 500 and 600 people over somewhat of a 30-minute phone call, and they run them through about 30, 40, 50 different questions about the economy, about politics, about prices, all of that good stuff, right? About their employment. And then they gauge whether or not the consumer is happy with where they are currently. So at least we have a slight little uptick here. But as I said, guys, it is not enough to determine a trend just yet. We're not quite safe, not out of the woods in determining whether or not consumers are kind of coming back out of the bottoms of cyclicality, or whether or not maybe over the next few months we continue degrading and degrading lower. But at least this point of data was positive, which did lift the markets a little bit. So do with that what you will. I would take it with a little bit of a grain of salt because we do know that the data has been very, very mixed over the past 2-3 weeks at this point, right? One thing we do have to remember, though, is our overall analyst and fund manager positioning. We brought this up yesterday, right? Investors grow increasingly confident in a soft landing. This survey was done between August the 2nd and August the 8th after the weak July jobs report, the non-farm payrolls that increased recession fears and sent the markets into a tailspin. 585 asset managers, guys, and they interview pretty much the biggest and the best in the game, so you can feel somewhat of confidence when looking at these probabilities. 76% of all respondents now agree to a soft landing, only 13% for a hard, deep recession landing right there, and only 8% saying no landing at all. So in the past couple of months, guys, you've seen really a proportion of most of everybody who was thinking that we were not going to get any form of recession at all. They have now all but pivoted into the soft landing category. So I'll remind you what a soft landing is, guys. It's exactly what we're seeing right now. We know that when interest rates are high, it puts a lot of pressure on the economy and the jobs market, and consumers have been pulling back spending as a result, right? That is what you call a soft landing, where you see certain cracks and red flags in the economy, right? Unemployment slowly rises, consumer discretionary spending slowly comes down, and then eventually you find a kind of middle point between the two, and then eventually it all goes away when the Fed decreases their interest rates and potentially starts doing quantitative easing, aka turns the money printer back on, right? That is the soft landing scenario. It is exactly what we're having right now. Notice it says soft landing and no landing, so we cannot expect the data to be perfect. There will be some weakness in the economy, but the gist of the moral of the story right now is that at least we are not pricing in a hard, deep recession landing, guys. That would be 6 to 12 months of brutal pain. So at least we're not in that scenario just yet. You can always take a look at your positioning here by asset managers as well. So here's your fund manager survey in terms of the allocation of cash that they have in their portfolios. Also a very good metric to look at whether or not institutions are positioning more defensively because they think a deep form recession is coming. Well, usually when you see cash levels at 4.3%, that is not recessionary signals at all. Usually that would, when people start to get really worried, you would start to see some levels at the 6%, high 5%, but we're definitely not there, right? Same as what we saw in April of 2020 and most recently October of 2022, almost at the peak of the asset sell-off back in 2022, right? So as of now, positioning still remains somewhat bullish for these markets. I will, however, remind you, August and September are notorious, guys, notorious for being relatively weak months in the market. So even though we are going through a little bit of economic challenges right now, very mixed data, also we have to deal with weak seasonality for the S&P 500 and also election uncertainty. So a lot of uncertainty in the markets right now, a lot of volatility potentially as well. But as I always say on the channel, guys, we take this one day at a time. We're not in the business of predicting recessions or predicting data points. We react to the data and then adjust our positioning accordingly. I've always said on the channel, if you have a long-term portfolio, a retirement account, or just a long-term portfolio that you're not touching, do not touch it. These current market environments, and arguably any market environment, is not a good time to be selling any long-term positions, guys. If anything, you want to be building up cash and adding to those positions as the market goes down. Time in the market far outperforms timing the market in the longer run. Now, if you're trading, guys, well, that's where what we do on the channel comes into play, right? In terms of having cautiously optimistic positioning like we're having right now in our swing trades, where we're still trading, we're still long, but we're being a bit more cautious with our trade selection, right? That's one thing. And on the flip side, if ever the data points really do pivot very bearish and we are potentially going into a deeper, more brutal type of recession narrative, then our positioning needs to change from cautiously optimistic to slightly pessimistic, and then our trading strategies change, right? Instead of put credit spreads below the market, we start writing call credit spreads above the market, and we start being very, very, very picky on our long setups and even start looking more and more for short setups, right? So that's how we play the different data points. We're not in the business of predicting these things and predicting where the market's going to be next week, in 2 weeks, or 4 weeks, guys, right? Nobody has a crystal ball. We're in the game of reacting to sensitive price point levels and basing our trades off of those. So hopefully that all makes sense. So let's get right into our technical analysis portion of the video right now. In terms of the SPY, we're going to go through these relatively quickly because I want to tackle the end of the video, guys, in terms of those swing trades and my portfolio rundown too. So not much has changed, guys. We're still looking for a juicy bounce on the SPY, and now we have a 100% engulfing move. So keep a close eye here, guys, on the 1 hour time frame. If we lose the 1 hour time frame, right, setting up for an hourly downtrend after a loss of the 12 EMA. I'll remind you, this is not a loss of the hourly time frame into a downtrend. This is just a loss of the hourly trend, but no lower highs and no lower lows are set. When you do see the lower highs and lower lows set with the hourly downtrend, you can probably assume your bounce is finished. Then we're going to be looking for a higher low on the daily trend, right? Anything above 5, 10, 50 is just going to be looking for a daily higher low for possible further trend continuation. Keep an eye out for a possible head and shoulders, inverse head and shoulders setup, looking very strong right here. If we do retest this level right down there, 546 all the way down about 538, this is the pocket that the bulls are looking to use as a base of support before maybe manifesting into the continuation of the daily uptrend. All of your moving averages are sitting down there as well. So we will see how the markets react to it next week, but definitely looking fairly good. Now, moving into the QQQs, same concept, right? Finally, a massive engulfing move by the bulls, but no clear daily trend change has been set. This is just one single move to the upside. No daily uptrend has been set just yet. So once again, keep an eye on the hourly time frame. If you lose the hourly into a succession of hourly downtrends, you know that your daily bounce is finished, and we're looking out for a daily higher low. Now, possible levels could be this one right here, 455, the base of support all the way back there, and at the lowest point all the way down to about 450, right? So could be due for a little bit of a retest down here before maybe embarking on the continuation of the uptrend. Keep an eye for the inverse head and shoulders setup as well. Could be quite a juicy form of setup too. On the weekly, we're looking very good here, guys. Weekly uptrend was obviously lost when they lost the higher lows right here. Loss of the weekly, but now with this weekly bounce on the QQQs, the bulls are set up really, really nice, guys. 61.8% bounce on the Qs. So even if we do lose the daily uptrend change attempt and go into a daily downtrend, what you need to understand, guys, is we have enough space on the weeklies now to be able to set up for a weekly higher low to change up this trend, right? It's going to be very tough, in my opinion, for the bulls to completely V-shape this. Obviously, anything is possible, but usually, especially on a weekly time frame, right? We were already surprised that they managed this on a daily time frame, but to do a V-shape on a weekly time frame, a V-shape of a 15% drop drop, guys, that is highly, highly improbable. Not impossible, but the probabilities definitely do not favor that. Usually you have at least some form of two-stage process recovery. So that's going to be the one we're going to be looking out for as well. Moving into XLF financials, financials looking very, very nice right now. After having lost the daily uptrend with this flush right here, they have now recaptured it back. So as soon as this move tops out, keep an eye on your resistance levels, right? $44 could be a location where it tops out. You guys know when a move's going to be topped out, right? Loss of the hourly time frame into hourly downtrend. And then you'd be looking out for a daily higher low. Anything above 42.13, just a daily higher low setup for potential a second attack at the all-time high areas. That is if we cannot break them right away. So looking quite good on financials right here. Never really losing the weekly uptrend either, setting the weekly higher lows beautifully into our area of prior all-time high resistance. Acted as support once again for the markets, and now we're just looking to challenge the all-time highs. So weekly looking good, monthly looking amazing on financials, and the dailies looking quite good as well. Once again, my favorite plays, guys, you know what they are, right? I don't even have to say them. Visa and MasterCard, right? So moving on into healthcare right now, healthcare also looking extremely good. So daily downtrend was in motion. Then we get a 100% engulfing move by XLV and looking very fantastic right now, right? So looking extremely good. Daily uptrend has been set on XLV as well. So at this point, guys, when this move is topped out, we're going to be looking for a daily higher low setup. Where can we be looking? Well, the previous all-time highs look like a very decent area to retest. The 12 EMA short-term moving average is there. And we also have all of this prior resistance, which should be support for the markets. So could just be looking for a little bit of a retest and run for healthcare. Keep in mind on the weekly as well, we never lost the weekly uptrend. Higher lows beautifully set in our zone of prior resistance. Resistance now acting as a first touch support for the markets. Looking very good for that trend continuation to the upside, guys. My two healthcare plays that I'm looking for right now, McKesson trying to get it back. Usually you do not see such a big weekly move on McKesson. You can see how stable this stock has been, especially over the last couple of years, right? Extremely stable stock, one of a high, it's on my high compounder list. So looking very good in terms of a swing trade opportunity because we can keep the stops really close, right? 531 is our stop, and we're really targeting right here 583, 585. So you have about $40 worth of upside and only $15 worth of risk. It is almost a 3-to-1 trade. Another one I've been looking into closely recently is Merck. Exact same trade setup, guys. Off of daily oversold conditions, big weekly move down into a great level of previous resistance, which is now newfound support. So if we're going for the daily trend change here, very, very easy, guys. All we have to do is we keep our stops below the lows. That's about $3 worth of risk, $3.50. And we're pretty much targeting this area of resistance up here, right? 120, 123, longer term moving averages are up there as well. So you have about $7 of upside for only $3 worth of risk. Once again, that is a 2-to-1 trade. And another one in healthcare that I'm looking at a lot is Johnson & Johnson. Johnson & Johnson's looking very good, trying to get the weekly breakout, retesting these moving averages, retesting these lower areas of support down here, right? I know that I put this area right here, but there's actually a smaller one within this range too, right? This tiny little range right there, this is the one that we're trying to break out of right now. So same concept applies if we're trying to go for the trying to find the weekly higher lows for further trend continuation. You need to watch when does the daily downtrend end. Now we have a nice little bounce setup going right here. So if we try to take this one, right, a little bit of a retracement, try to take this one from here, we don't have that much risk, right? Downside risk is only about $3 to the downside. Stops go below the lows right there. And then at that point, we're targeting the next level of highs. TP1 would be 165, so about $6 of upside, $3 worth of risk, and your take profit number 2 should be all the way up here, 170, 172. So decent risk reward on Johnson & Johnson as well. Moving into semiconductors right now, semiconductors also looking fairly good, 0.14% to the upside today. Not a big day for them, but a green day nonetheless. So daily uptrend still in motion right now. Keep an eye on this level of resistance above us, 258 down to about 248. If we get stopped out in this location right there, just gonna be looking for a daily higher low. Anything above 211, looking for that daily higher low for possible further daily trend continuation, right? Once again, looking maybe for an inverse head and shoulders. So I'd be very interested on a retest of 237 down to about 230. This green box right here, right? Breakout into resistance, retest this as support, and then maybe run a little bit further. Could be a decent trade opportunity on SMH. On the weekly bounce is looking great at this point as well. On the weekly, guys, we are gauging almost a 618 retracement. If we can pull into that area in the next week, it's going to look very, very good, guys, to where even if we lose the daily uptrend, daily downtrend consolidation in this level, I'll remind you, we'll just be looking for a weekly higher low for possible trend continuation in the month of September. Looking very good. A few of the swing trades that I'm in right now, ASML. I like ASML in this location right here. If we retest 880, possibly 880, 875, same thing. Looking possibly for the inverse head and shoulders all the way up here to the $1,000 level. ASML looking good. Micron as well. Micron looking very good. I'm happy for you guys if you took the trades for me down here. But if we're out of a position right now, may just be looking for a daily higher low for the potential trade increase or the daily trend increase at that point. Anything below 100 could be considered a decent swing trade opportunity. Right? Those are just a few of the names that I've been looking at in semiconductors as well. There's a lot more, guys. It's just a few of the ones that come to mind right now. SMCI, same thing. If the move tops out, we look for a daily higher low. Could be a daily higher low entry opportunity. 560, 550, the stops go below the lows, and then we're targeting these levels right here, right? 750, 725 area could be a decent swing trade as well. Now moving into IWM Russell. So IWM Russell, very, very muted day, 0.26% to the upside, but we are in the context of a new daily uptrend right now. So at least the bulls have something to show for their consolidation, right? So if this move tops out right here, looking for a daily higher low, anything above 204, going to be looking for that daily higher low for possible further trend continuation, right? Where are we above right now? Well, we are above all the short-term moving averages, but we are also above this big area of consolidation. That is 208 up to about $210. So might just be able to retest this level as support and continue our daily march higher into this resistance, of course, 216. In terms of the weekly bounce, guys, well, you already know, right? Weekly momentum was almost all but completely lost, and now the bulls are trying to get together a bounce. The bounce is decent, already 50%. You would like to see them get all the way up to about 618 to give them the best chance at resetting into a possible weekly uptrend, right? So Russell still on the fence with this one, still not my favorite trade, because I just feel that if we get any negative data points whatsoever in the next couple of weeks, guys, this trade will unwind as fast as it wound up in the first place, right? You can see it right here, 4 or 5 days worth of up, then sideways, and then 3 days worth of down. That is your entire move, right? And I think it could be very, very volatile. So I'm staying away from this one, right? Until we get more clarity on the economic landscape. Moving into the Dow Jones right now, Dow Jones looking very, very solid, 0.24% to the upside. Nice little daily uptrend set up by the Dow Jones, and now they are running away with it, right? So as soon as this move is topped out, how do you know it's topped out? Once again, watch for the loss of the hourly trend. Then we take a look at our daily, and then we'll just be looking for a daily higher low, anything above 39,250, looking for that daily higher low for possible further daily uptrend continuation. So keep an eye on this level right down here. If we drop early next week, might be coming back into the 39,900 to 40,000 level. That was big resistance for the markets, could be acting as support, and all of your short-term moving averages are right there as well. Nice little area of confluence for a potential swing trade to the upside. On the weekly, never lost the weekly uptrend at all, right? Higher low is set, and we're just looking for the continuation of the uptrend beyond the all-time highs around the 41K number. Looking very strong across most of your indexes, if I do admit myself. Now, moving into Apple. Apple just cannot have a down day in the last 10 days of trading. Extremely bullish setup, right? Looking very good. Fully engulfing move right now, but eventually they will have to reset into a daily higher low, into a daily uptrend, right? We always know Apple can go on these 7-10 day rallies, but they do not last forever, right? Keep an eye on the loss of the hourly trend. That's when you know that your move will probably be topped out at this point, right? So keep an eye on Apple right then. If we do fall off from here, we'll be looking for a daily higher low, anything above 195, looking for the daily higher low for potential further trend continuation, right? Where are we targeting right now at a first glance? 219 down to about 215, right? Probably trying to find a little bit of a base down here and then rally. If we come down into the 215 level, could be a nice little swing trade opportunity. The stops at that point would go below this low right here, which is your most recent adequate level, right? So you'd be looking at maybe about $8 worth of risk, and then you'd probably have to hold all the way up to roughly this area right here, 227, and possibly the all-time highs, right? So the risk reward isn't the best on Apple, but it is a trade idea. Myself personally, I need to wait for some more consolidation, guys. I cannot take this one up here. I keep reiterating the valuation is very, very high on Apple right now. Nothing bad to say about the company other than the valuation. I liked it a lot when we were trading sub 200s, but ever since we've cracked 200s, guys, it's getting a little bit dicey to trade this one, if I do admit so myself. But on the weekly, looking very good on Apple, trying desperately to recapture this weekly uptrend. Look at the size of this weekly bounce, guys, almost 80%. So the bulls do have a very good chance of resetting into a weekly uptrend as well. So we'll keep an eye on this one. Moving into AMD right now, AMD also looking very solid. Another day to the upside for them, 148.56. So where are we looking to possibly top out here, guys? Well, probably in the 155 level, right? We know this area has been big resistance for the markets in the past. Support back here, huge area of consolidation. Now it should be acting as resistance above us once again. That is 155 up to about 160. So that is probably where the next move on AMD can be topping out at this point. When it does top out, just remember we are in a nice daily uptrend right now, and any consolidation going to be looking for a higher low. Anything above 129, looking for that daily higher low for possible further trend continuation. Where could we be looking for the higher low here, guys? Target this area of support that we just came out of, right? 142 down to about 137. That little pocket right there seems to be a great level to retest for the bulls. On the weekly, well, we know that the bulls have a lot of work to do here, guys. The bounce size, even though it is somewhat adequate right now, is not the most favorable. For the most favorable bounce, we would need to at least come into the 50% mark, which is around 153, and the 618 is about at 160. If we can pull up into those locations on the weekly, gives us enough space to eventually pull back, set up for the weekly higher low, and the weekly trend change as well. So a lot of work to do for the bulls right now on AMD, but I do like this one. I will continue to play short puts in the following range down here. This is a great range to be loading up, in my opinion, either short puts, straight shares, or even call debit spreads with maybe 3-4 months of time, targeting the next upside level around the 160s. Moving into Amazon right now. Amazon also not doing too bad today, but a little red day for Amazon. So still eventually looking for the pullback on Amazon. We know we are approaching a big area of resistance above us, right? 178 to 180. This level was huge support for the markets virtually since the month of March. Now most definitely will be acting as resistance. So in the event that we top out right here and go lower, we're just looking for a higher low. Anything above 151, looking for the daily higher low for the potential daily trend change. Why are we favoring the daily trend change, guys? Because of the size of the bounce over a 618 move, looking very attractive if I do say so myself. So any daily higher low, guys, may just be a nice swing trade opportunity for some potential positioning higher. Now, if we do pull back here, guys, I'll be looking for some short puts, anything below 170, 169 down to about 165, the lower end of this level right here, right? This is where I'm maybe looking to write short puts and possibly even enter some call debit spreads or maybe even some leap call options. Keep in mind, if we do pull back significantly on the daily, let's say we do not set up the daily trend change and instead set up the daily downtrend, that's also a possibility. Then we'll just be looking for a weekly higher low for further trend continuation, right? So keep that in mind. The size of the bounce on the weekly is adequate right now at about 50%. So if we do pull back, the bulls do have a good chance at resetting the daily uptrend right now, guys. And it's Amazon, right? No reason for this company to be pulled back as much as they have. Their earnings were extremely strong and their valuation as well is very, very good. So I really like this lower level right here, guys. 169, 165 for any credit spreads or short puts, or if you pull back into there, maybe some call debit spreads and some leap calls for the end of 2025. Now, moving on to Google. Google also not doing too bad here today, 0.96% to the upside. They gave back a lot of their gains today, could not break this 166 level, right? So they tried for the daily trend change attempt, but just got rejected right here. So once again, we will see, can they do it on the Monday morning session or Tuesday? Can we get the daily uptrend going on Google and bring us into this level of resistance, 175 to about 171? That's where you may get topped out and go for a secondary, third leg like this, right? However, if we fail, if we cannot breach this and breach to the downside and lose the daily uptrend attempt into a daily downtrend, then you need to know that the weekly lower highs are set and possibly moving into a lower low on the weekly. Just remember, on the weekly, the bounce on Google is not the best, one of the weaker in big tech. Look, only a 25% bounce at best. So if they lose the daily trend change attempt right away, guys, the bears do have all of the probabilities on their side to put in lower lows. If we do put in lower lows, we're probably coming down here. 152 down to about 144. Great previous all-time high resistance. Resistance for the markets right here as well should prove to be a decent level of support. And that would be a sell-off on Google, guys. Top to bottom of 20 to 25%. Always a great opportunity to be buying Google at those discounts. And I'll remind you, the valuation right now at 180 was fantastic. So lower in the mid 160s or even 150s, the peg will be all the way down to about a 1.2, maybe even 1.1, looking extremely solid on this company. Moving into Meta right now. Meta also not doing too bad today, down about 1.84%, but really nothing in the grand scheme of the last 10 days worth of rally, right? So I'll remind you, what are we doing right now? huge engulfing move on the daily, eventually looking for the daily higher low for possible continuation of the daily uptrend. Anything above 451, just looking for that daily higher low. Where could we possibly pull back to, guys? Because we know this area is big resistance for Meta. They have not been really able to break above and close above there to create new all-time highs ever since the month of March. So it's a continuous struggle for us. Where could we maybe pull back into, guys? Well, probably this level of consolidation right about there, this yellow line, right? Previous consolidation for the markets, also an area of congestion for the markets. That could be a decent area of pullback for the bulls. And if you want to put the fib on this as well, right, that would pretty much be a 50% retracement, the maximum that the bulls can give back and keep their daily trend change attempt alive, right? So not looking too bad on Meta. I will be a little bit more patient because if we do come down into here in the lower $500 range, 495, it opens up short puts in the lower 475, 460, put credit spreads as well down there too. So looking very good as a setup on Meta. The weekly also looking very good, fully engulfing move at this point. So even if we do lose this daily trend here, guys, and set up for more daily consolidation, well, just looking for a weekly higher low for further trend continuation. Looking very strong on Meta. Moving into Microsoft right now. Microsoft also a little bit red here today after the past 10 days worth of rally, but that's okay. The bulls have created a ton of space off of the lows here, guys. Take a look at the size of this bounce on the daily, and you'll see it was an over 80% bounce. So the bulls are set up very, very nicely here, guys, for a potential daily trend change attempt. So when we start losing more and more levels, keep an eye on the hourly. This is exactly what I mean. This is a pure form example of what I mean, right? Loss of the hourly time frame right now after several days of rally. That is when you possibly know your daily move is finished. They have not lost it yet. The hourly trend to the downside is in motion, but you have to break today's lows. If you don't break them on Monday, guys, the bulls can just recapture this and your rally will continue. If you do breach them to the downside, you know that your daily highs are set and looking for some daily higher lows to potentially come in before another leg higher on Microsoft. So if we do get that pullback here, guys, maybe down as low as about 410, 408, 407, something like that, it will open short put opportunities down here, put credit spread opportunities down here as well, because we're looking for that bounce. That's why we're going to write all the way down here into this massive level of support, right? Or even a call debit spread attempt, right? For possibly targeting these levels right here in the month of September, October. Usually I do about 2-3 months of time on my call debit spreads. In terms of the weekly bounce, guys, well, just remember that Microsoft's weekly bounce is not as strong as some others, only about 38.2%. So if we do somehow roll over on the daily, guys, the bears do have a chance of revisiting these lower levels and possibly even flushing them to the downside. We're not there yet, but it's just goes to show, guys, it is critical that Microsoft regains the daily uptrend and pushes this weekly move at least to the 50% mark to give us more cushion, which would be around $430 on Microsoft. But still, I love the company down here at these lower valuations for some swing trades. Moving into Netflix right now. Netflix just cannot be stopped here. Another 1.5% day. Fully engulfing move by the bulls at this point, and now already challenging our higher levels of resistance that we established in the months of July. So moving on in, guys, if we lose this move right now and set up for the hourly downtrend and lose that, you guys know daily consolidation is underway, and we're just going to be looking for a daily higher low. Anything above 585, just looking for that daily higher low for possible further trend continuation. And now, guys, we can officially move this little box right here, which was the lower bound of support, because now we've actually broken above another area. So we're going to move this box right away from that level to this level right here, right? So the peaks of this one, the congestion here, that could be a more decent level to base ourselves off of, right? So this is going to be the moral of the story, guys. Looking for the daily higher low right here, moving averages as confluence and support 655 down to about 632, maybe a breakout, retest of this range and possible daily uptrend continuation. Look at the size of this bounce on the weekly, guys. Netflix with one of the stronger bounces on the weekly, already an 80% retracement on the weekly. So even if we lose the daily uptrend ever so slightly here and consolidate in an extended fashion for some weeks, just understand looking for a weekly higher low, anything pretty much above 584 would be that weekly higher low for possible weekly trend continuation. Looking very good. We have a long bias, guys, because Netflix is in a hell of a bull swing and uptrend right now, probably targeting the all-time highs maybe even before the end of the year. Moving into NVIDIA right now. So NVIDIA continuing its march forward as well, 1.4% to the upside. Earnings on NVIDIA just 2 short weeks away at this point, guys. So daily uptrend clear as day on NVIDIA right now. And as soon as this move gets topped out, you will understand that by the loss of the hourly time frame, right? Loss of the hourly time frame, daily move is topped out. Then we look for a daily higher low, anything above $98. Just looking for that daily higher low for possible further trend continuation. Target this level right here, which we just broke through, right? So 119 down to about 115 could be a little retest area, challenging these levels again, challenging the moving averages, maybe a little support zone, and run for the continuation of the daily uptrend. Looking very good in the weekly as well. This was a weekly downtrend on NVIDIA. Now look at the size of the bounce, right? Size of the bounce is very juicy, almost an 80% bounce. So in the event we lose the daily uptrend into further consolidation, daily downtrend again, right? Just understand we're looking for a weekly higher low for further weekly uptrend continuation on these markets. NVIDIA never lost the monthly time frame. That's why we need to remain bullish, especially after a weekly sizable bounce like this. Looking quite strong on NVIDIA. Myself personally, I'm only really going to start playing it, guys, if I can get 110 down to about $100. You know, call me conservative, but this one can move, and it only takes one day of 4 or 5% to the downside for us to get availability in those lower strike areas, right? I played it a ton down here, and we never got assigned once, and we pretty much walked away with 100% profit on every play we took. So patience does pay. Moving on to Tesla. Tesla, a nice day as well, 0.92% to the upside. Daily uptrend clear as day as well, so continuing to move on forward. Very nice price action on Tesla, guys. Nothing really bad to say, right? Now, as soon as this move gets topped out, just looking for a daily higher low. Anything pretty much above 191, we'll just be looking for that daily higher low for continuation of the daily uptrend. Where are the bulls looking to take us, guys? Well, we're looking to recapture as much as possible of this huge move down. But we have to understand, guys, all the momentum has been lost on Tesla. So I would be highly surprised if we can V-shape this entire move, guys. Usually that is not the that's not the base case scenario. The base case scenario is at best a tightening range of accumulation before a break to the upside, if that's the if the macro data and Tesla's data supports it. At worst, you're expecting a lower high into maybe revisit of the lows. So Tesla right now, even though it is in the lower $200 range, it is a little bit too high for me. I really want to write some options, guys. 185 and lower, right? And right now there's just not enough premium down there for it to be worth it for us. But if we do get some retests down here, that's when it does open up the possibility of some put credit spreads or even some short puts in this lower range of support. I'm just not taking any chances on Tesla in this market. I don't think that there's many positive catalysts coming for the company much before the rate cuts, right? So may just be due for a little bit more consolidation. And then when those rate cuts come in, we will see. Nobody knows whether or not the rate cuts price action is priced in to all of these interest rate sensitive stocks, right? We will see when the rates are closer and closer how the price action starts affecting these stocks, and then we will position accordingly, right? Now, moving lastly onto Palantir. Palantir, just an absolute rocket ship to the upside. Absolutely love it for my long-term portfolio, but unfortunately, we were not in any swing trades on Palantir recently. Congratulations to all the bulls out there who were, though. So beautiful continuation move by Palantir. This is the best case scenario. You remember, guys, when we were breaking these highs, I was saying there's one of two things that's going to happen. The best case is putting a lot of distance between us and this big support zone right now, which is $29 to $30, right? Huge resistance in 2020 and 2021. Now it's going to be acting as support once again, but you need to create space above it to use it as support, right? If we just come into it, right, can we really say that we can use it as support when we're so shallow in such a shallow fashion above it? No, it doesn't guarantee that we can then use it, right? But if we put a lot of space in and then we get a nice drop, well, by the time we come into this big area of support, the bears are going to be tired, right? And it gives us the better odds of being able to have a bounce in that location. So as soon as this move tops out here, guys, going to be looking for a daily higher low, anything above 20, pretty much anything above all the way down here, 2132, just looking for that daily higher low. Where are we going to look for that daily higher low? Exactly right here, guys, this huge level of support. That could be a juicy breakout, retest trade attempt for a possible run, right? That could be a nice little opportunity for some swing trades long. And even on the weekly, guys, weekly is looking great for some continuation of the uptrend. Keep an eye on this level right here, guys. The next areas, they're not that many. $33.50, and then it's all the way up to about $38. Not much resistance left on our way as of right now, right? But just keep in mind right now, the valuation of Palantir at $27 was a little bit rich. And if I were to do it right now, as a matter of fact, we can do it right now. So let's say if we do it at 32 bucks, right? So 32 bucks divided by our 2024 forward EPS gives them a P ratio of 96. 96 divided by your EPS growth rate of 26% per year, 3.72. Very, very, very expensive, guys, right? And not just because they're at the all-time highs. There are other companies that are at all-time highs, such as Meta, that have an extremely cheap PEG ratio as a whole, right? So Palantir, definitely not the cheapest one out there. I am not going to be chasing it up here at these levels. That's pretty much everything we had in terms of our stock rundown and analysis, guys. Hopefully you enjoyed that. Now, before we get into the portfolio, let us do a quick rundown right here of my high conviction stock list right there. So once again, this is a stock list that I put together over the last few years. Only high quality companies, guys. Usually the return on capital employed and return on invested capital, two signals of high quality companies, are in excess of 15% per year, which usually on a longer term basis gives them a compound annual growth rate for the stock price of at least 15% or better. And they have extremely high free cash flows. All of their charts usually look the same, guys. Steady up and to the right, right? So we're going to go through as many of these as possible, and I'll show you guys how quickly you could run through these when you know what you're looking for. First things first, you want to put these things on at least a weekly time frame, and then we're going to look for levels that we're basing our trades off of, and I'll tell you guys whether or not I like it for short puts, call debit spreads if the price is too high, or put credit spreads as well if the stock price is too high, right? So Palo Alto Networks. The trick is to be able to go through these as quickly as possible. So I'll check the timer right now. I'm going to put about 10 minutes on it. Then we're going to go through my portfolio. So before we do that, give me a quick second. And let's run into it. So weekly time frame on Palo Alto Networks. Is it clear? Is it at a nice level of support right now? No, right? It is not very clear. The bigger level is down here. So no trade for me, even on the daily, guys. A little bit too extended. I look at it right here. That's it, guys. That's all it is, right? No more than that. Airbnb, company number 2. Love it down here in this area. Short puts, yes, all day. Put credit spreads, yes, lower end of the range, and even call debit spreads with some time on it, looking for that extension, because not only are we coming into a big area of support, but it also has daily oversold, or weekly as well, oversold conditions, coming out of daily oversold conditions too. So it could be looking like a very nice swing trade opportunity. That's why I'm looking at it. LRCX, Lam Research, right? Not ready yet. No, so we came down into the big area of support, which was all the way down here. Now it's kind of run away from us. We need at least a little bit of retest in that range. If not, I'm not going to chase it up here, right? Especially not chasing it into our resistance range. So on to the next one, guys. It was a good opportunity down here, but we missed it. Not going to chase. KLAC as well, right? Fully engulfing move, establishing a nice base of support down here. Could be a nice little breakout and retest trade when it gets there. But as of now, not ready just yet here, guys. If you want me to draw that support box even better, it is this one that we're talking about, right? So unless we get a retest of that range, I'm not going to be quite interested. That was a retest of the monthly range as well. It's just pulled away from us right now, so not chasing. Meta, we went over it in the more recent one, but same thing applies, right? Can't chase it up here at the all-time highs. We want to be looking closer to our weekly support range. So as of now, just no trade as a whole. MTD, Mettler Toledo, right? Extremely high conviction quality company. The only problem is it's not really close to our big weekly support range. There could be a tentative swing trade entry right here because it does represent some monthly consolidation. We are in a nice little monthly uptrend right now. Monthly higher lows are being set. So yes, I like it in that lower range. Not ready yet, but if we can find it in this location right here, swing trade with shares all day, yes, because it is very expensive, and also potentially put credit spreads because it is so expensive too, and maybe even call debit spreads with a lot of time because we're looking to just follow that monthly uptrend higher, right? Moving on down, Otis, absolutely. Look at this monthly uptrend right here, right? Beautiful monthly uptrend, back testing our previous all-time high resistance, back testing it again. So I love this area. Short puts over here, yes. Put credit spreads over here, yes. And even from here, guys, tempted to do some call debit spreads with a lot of time on them, maybe 2-3 months, because you guys know, usually the stocks in this list, they do not move too fast. So if we're playing call debit spreads, you have to put a little bit of time on them, and we're going at least 1 to 2 strikes out of the money. Moving into Mercado Libre. Mercado Libre, unfortunately, guys, At this point, you're just chasing if you're trying to take this one. I was advertising it a lot in these lower ranges right here because the support area was clear, right? We were looking for the monthly cup and handle into big support and then run further. And that's exactly what happened. As of now, no trade just yet. If you want to trade on it, guys, there's only one trade that comes to mind. It would have to be a back test of this location right here, 1850 down to 1750. As of now, guys, no trade on Mercado Libre. Moving into Costco. Costco as well. No real trade to be had here, right? Either, right? So now we've established a baseline of support down here. So in the event that Costco continues consolidating and comes back down into maybe our lower 805, $800 range, then I would be tempted. Right now, it's in the middle of nowhere, guys. So it doesn't really serve us any purpose of trying to take a longer term swing trade on it. It's in the middle of nowhere. On the weekly, it's in the middle of nowhere. On the monthly as well, kind of in the middle of nowhere. But you can see why this area was such a key level on the monthly back test. There, it was good. If we see it again, that's where I'd be interested. As of now, no trade. Moving into ANET. Arista Networks. Arista Networks, same thing, right? You can see on the weekly time frame, back testing of this location right here. The trade was here a few short weeks ago during the sell-off. Also, monthly higher low area was being set too. That was a great level. Up here, you're just chasing. That's just fact of the matter, right? Just chasing. No clear defined support levels to base our trades off of. So we're just not interested in taking it. If ever we get a little bit of a retest on ANET down here, I would consider maybe writing short puts, put credit spreads down here, and maybe even call debit spreads just for the perpetual monthly uptrend continuation, right? Next one, AOS, A.O. Smith Corporation, right? They do building products. As of now, AOS is possibly presenting us a trade opportunity. Coming into a baseline of weekly support, you can see that even best on the monthly, right? Gorgeous monthly uptrend right now. Just a little bit of sideways hesitation on the monthly too. If we come down to this location, guys, very nice area of congestion for the markets. So I'll be looking for some short puts all the way into this area right here. Put credit spreads as well, and maybe even some call debit spreads if we make our way into the mid portion of this level. Especially if we can maybe get some daily oversold conditions with that. That's when I love doing those call debit spreads. So AOS, yes, keep it on the back burner. The trade is almost here. Waste management. Well, waste management was a great trade when we were looking out for the breakout of a long-term 2-year range right there, right? Was looking very good for the breakout of the range. That was a trade that I like as well. But now, right now is also a potential decent swing trade opportunity. It's been in a sideways range since the month of February. Extremely solid company, forming a base of monthly support. This could potentially be a swing trade opportunity because we could do it with shares as well, short puts below here, put credit spreads below here, and maybe even some call debit spreads with a bit of time on them to move further. Why? Because the stop loss is super close, right? 196. If we lose 196, the trade is invalidated, guys. They'd be setting up the monthly downtrend. They'd also be setting up the weekly downtrend as well, and that would just lead to longer form consolidation. We don't want to be in the trade anymore. So trade is right here, right now, with a tight stop loss. Moving on to the next one, NetApp. So NetApp also looking extremely strong right now, but unfortunately is in no man's land, right? In complete no man's land as a whole. No real weekly support to be basing our trades off of. Nothing on the daily either. So I would see a chart like this and I would just move on, quite frankly. Moving into Microsoft. Well, Microsoft, we did it on the technical analysis portion of the video. I told you guys I love this region right here. So if you get a little bit of a pullback, that could be an area for shares, short puts if you have the capital, put credit spreads in the lower area, and even call debit spreads with a little bit of time on them, 2-3 months, to get that weekly rally underway and perpetually move this monthly uptrend in motion too. Unilever, extremely solid company as well, guys. You'll see all these companies in this list are just quality companies, right? So Unilever, unfortunately, on the monthly has ran away from us a little bit. It's challenging the all-time high resistance. Do we want to buy all-time high resistance levels right now? No, it's just not a good value proposition, right? The better thing to do is wait for a retest of this range of consolidation, huge support for the markets, resistance for the markets as well. So if we come back down here, 56, 55 could be a nice little swing trade opportunity, but as of now, it's in no man's land. I would just skip over it. Moving into Vici. So obviously you guys know I was promoting the heck out of Vici when it was at these lower levels for good reason. Huge level of support, right? Prior all-time highs, huge support for the markets for literally 3 years, guys. You have to take these trades when they come to you. 3 years worth of support. So that one is obviously finished. We don't have those levels anymore, but we do have some short-term levels on Vici right now. Keep an eye on this range right here. 31 down to about $30. Big prior support for the markets all the way through 2022. Then we flushed it, recaptured, of course. It was resistance for the markets for a while. And now what the bulls are trying to do, trying to set up for the weekly trend change, right? Breakout, retest the range and run. The trade is right here, guys, right? put credit spreads, although I'm not a fan of put credit spreads on this one, guys, just because they only have monthly options. So this one would have to be exclusively shares alone, or maybe even some call debit spreads with a lot of time on them to give it a chance, right? It's a REIT. It doesn't move like NVIDIA. Solid company, but you have to know what you're trading, how much it moves or not. Next one, PayX, right? So Paychex, gonna do a few more of these, or sorry, Paychex. So Paychex, you can see a clear as day level, right? All the way down here, roughly. I mean, we could kind of move it up a tiny little bit to include more of these candle bodies, right? So that's anywhere between 117 down to about 106. This $10 range, great area, guys. If for whatever reason we start revisiting this location, great area. Short puts, put credit spreads, even potentially call debit spreads. But you know, we've been in a long-term range for a long time. So if you are doing call debit spreads, you need to get very good pricing and you need to give a lot of time on those contracts, right? But this chart looks absolutely fantastic. Would love being a buyer of Paychex down here. Next one, Canadian Pacific. Look at these two charts. Don't they look exactly the same? Long-term as well, right? Whenever we get a long-form multi-year consolidation, it usually tends to explode to the upside, especially because all these companies have extremely solid fundamentals. So once again, guys, we are potentially retesting the $75, $73 location. Great area to be adding some shares or maybe writing some puts or possibly even some call debit spreads, but just leave yourself enough time on them so you can eventually get that weekly uptrend rally once again and possibly the move on the monthly to the upside, right? So looking very good on CP. I really like it down here, 75 and lower. Booking.com, another one, which is in our buying opportunity zone just a few short weeks ago. Huge level of support all the way from the entire past year. Previous resistance for the markets as well, and looking essentially for some possible monthly higher lows. Now, it did blast through here with the sell-off and their earnings, but it was a decent buying opportunity for an extremely solid company. Up here, kind of chasing it a little bit, right? So we need to wait for a little bit of a retest down here, 35, 3,400, a little bit of a retest and possible run closer to our area of support. I like it a lot. This one's expensive, so we can maybe only do fractional shares, possibly some call debit spreads, or some put credit spreads at the lower bound of this range. SPGI, one of my favorite companies in the entire market, same concept as well, right? This is an infamous breakout retest trade. All-time highs, break out of the all-time highs, retest, and possibly run. So this retest location right here, extremely strong. Keep an eye on it, right? Monthly, gorgeous uptrend, no problems there. Already back tested it once, so we may not get this trade a lot more in the future, right? If we get any further discounts, lower down here, 480 all the way to about 465, huge buying area, not only for shares, but possibly even some call debit spreads, put credit spreads at the lower end of this range right here. Put credit spreads, I usually always go very close to the money and keep about 2 months of time on them just to really give the stock a chance to move because they are higher conviction, less momentum bound stocks, right? So we need to give some time on these plays, but one thing's for sure, all these plays are extremely high probability when they do open up. So that's just a few of them. You know, obviously we can't get through the entire list, right? We did go through a lot of them. So hopefully you guys understand the concept, right? The concept is going through these quickly, identifying large levels on weekly and monthly timeframes quickly and basing our investment thesis on them as well. UNH, same thing, right? Break out of the all-time high, retest. If you find some levels down here, guys, since it's a high price stock, the best we can do is call debit spreads with 2-3 months worth of time at the money or close to the money, put credit spreads and this lower location right here if we pull back into it, right? Or maybe even fractional shares if you want to just take the shares to the upside. So that's just how I play all these high convictions trades and how I find all those opportunities for some swing trades more specifically, right? So hopefully you enjoyed that. Now let's jump right into my portfolio for a quick review of the weekly ending values. All right, guys, so taking a look at the portfolio right now, before we get into the positions that I still do have, let's go over a few of the ones that I closed today. And there weren't that many that we closed. Number one was definitely the Applied Materials earnings play that we had. It went very, very well. We wrote the 190 puts yesterday for about $1 in premium, and we were able to close them over the course of the day today for 43 cents. These were for next Friday. So we already realized on the day over 55% profit. So when you realize 55% profit in one single day, guys, it is not worth it to retain $19,000 worth of exposure for only 43 remaining dollars. It just does not make sense to hold them through to next Friday. So I close them right away. So that way I have all that buying power back on Monday to shop for more plays. Now we also closed the Nike call. Was very pleased with this one, guys. We made some very decent money on this Nike call right here. You can see, as a matter of fact, they might be able to find it where we bought it, as a matter of fact, on the chart. if Interactive Broker still shows it. Let's go have a look here. Usually it gives little arrows here where I bought and sold these things. Can I find the buy arrow? Unfortunately not. So it doesn't show me the buy, but you guys can see right here, we bought them back here June 28th. So it's been a while, right? If we go back on the chart on Nike, June 28th, you can see that that was all the way, right? All the way back here. The first day after earnings, right here in the $75 range. And we were looking for pretty much a break to the upside, just looking for a little bit of recovery. Now that recovery took a long time to play out, right? We've been in this one for a while, almost a month and a half. But I'll remind you, these calls were for October 18th. That's why I put so much time on them. $80 calls out of the money. We got them for $3.30, so $330, and we closed them today for just over a 2x, almost $700. So, you know, just over a 2x in profit, about $365 in profit. Very, very decent trade in my opinion. That's what I was looking for. Can it possibly run a little bit more? Sure, guys. But the reason I closed it, we're coming up on daily overbought conditions, and the 4-hour RSI is also really overdone right now at about the mid 80s. I closed it early on in the day, almost got the high of the day when the RSI on the 4-hour was about 86. So I closed the trade. It served its purpose. Now possibly looking for some more swing trades with that same capital, right? So those are just a few of the ones that I closed here today. Now, in terms of the ones that we remained open, well, we have a lot of earnings plays that are expiring worthless today. We'll go through the list, however, just in alphabetical order, I assume, right? So these AMD bull call debit spreads, we still have them. As I said, I opened one yesterday. If it drops even more back to the 110, 111 level, then I will add a little bit more. These are for November, so still tons of time left on them. The AMD positions, right? This one will be called away today. I explained it yesterday. AMD and Amazon are the exact same concept. When the market was dropping really hard a couple weeks back, right, we got a sign on AMD at the 140 level, and then it just kept dropping, right? So what I did is I had covered calls around here, and it kept dropping and dropping. We pocketed a lot of covered call premium in this range, and our pretty much average cost on AMD right now is about a 134. So keep in mind with these in the money covered calls at 128, we got about $8.30. We will be selling the AMD shares today for about 128 plus 830, 136.30. Our average cost is about 134 something, so we're making about $200. Now, the reason I had in the money covered calls is we were playing defense, guys. We just didn't want to run the risk of it dropping anymore. And as a matter of fact, we were covered this entire Black Monday drop. It dropped a lot, we stayed covered, and then it kind of just recovered past us, right? So sometimes playing defense, it does lead into a little bit of locking in the losses, right? This one came out to a profit, but the Amazon one will be an actual loss. So we got a sign on Amazon at 190 minus the put credit. We got 189 average cost. And then we wrote covered calls, a galore of covered calls, not only leading into earnings right here. We had in the money covered calls, pocketed all that premium, but even here as well on the Friday session, we rolled our covered calls down and then we closed even more profits down here. And then we took a one last hedge with the 160 in the monies, looking for a potential retest of the lows. And it did not retest the lows. It just completely ran away from us. So that's why we are stuck here with the in the money 160 covered calls. We will be selling Amazon today at 160 plus 767. So roughly 167.67. Our average cost on Amazon after all the premium collected on the covered calls is about 175. So we're going to be taking roughly a $750, $800 loss on these Amazon shares. But I'll remind you, what is the flip side? The flip side is retaining these positions and rolling these calls out further. Well, there's no premium for rolling 1 week in the future, guys, so I can't really do that. The other option is just taking off the covered calls, just taking them off, taking the loss on the covered calls and riding the shares. But do I really want to ride Amazon shares leading into big resistance right here after a 10-day rally and potential pullback, guys? Probably not, right? So what I'd rather do is get called away on AMD and Amazon, and then if we get a little bit of a retracement back, I'll be opening some short puts again here, trying to get assigned the stock here, and then I'll be riding it from a lower level. That is my intention with the two things. So AMD will be a tiny win, but Amazon will be somewhat of a larger loss. Once again, that is the byproduct of playing defense and locking in your losses. You're trying to manage the risk, trying to not lose more capital, but once again, when we get these improbable 10, 11-day rallies on the SPY and QQQs, those are the only very edge case scenarios where it could kind of bite us in the butt, right? So hopefully that makes sense. These will be gone as of tomorrow, called away officially. Now, ASML still have those swing trade shares, going to be looking to ride these possibly into the $975,000 range, but good profit on them so far, about 4.5%. BITX, we still have the Bitcoin play that we put on yesterday, roughly break even for the most part. We had that short put on Bitcoin, the 24s. Now BITX ending well above 24 today, so those will just expire worthless, right? And we just get to collect this $24 in premium. So nice little swing trade short put play that I made yesterday, guys, and already 100% profit. The John Deere, these December bull call debit spreads, we still have those on, slightly down on them, but I'll maintain them. They're for December, a lot of time left. Should respond well to interest rate cuts, which is why I'm keeping them. We have the John Deere bull put credit spreads that we had for earnings. These are just expiring worthless today. John Deere obviously trading right now in the 370 range. So these, no chance of being assigned on any of the two sides of the trade, right? So we just get to collect this $20. Disney, swing trade on Disney, working out really nicely so far, only 10 shares, but we do have one leap call, right? December 19th, 2025, 105 calls, $105 strike out of the money. We got them for about $5.94, and they're above $7 right now, so decent little profit on them so far. We'll probably maintain this one for the foreseeable future. Dollar Tree, this is a wheel trade that expired worthless today, so we collect all of that 32 cents. This trade was put on, I believe it was Wednesday morning, so fairly good ROI in just 2 short days of trading. Elf Beauty as well, we get to collect this entire $75. This will be erased. We get all that buying power back. Beautiful trade, worked out nice. EVVTY swing trade looking out very nicely. We got in at almost, for all intents and purposes, guys, we pretty much picked the lows, right? We got in right here at around the 94, going for possibly the daily uptrend swing, and we clipped it. Now it's going to be going a little bit higher, and we're looking for a weekly trend recapture. I don't really want to sell this one much before the $110 level on the weekly, but looking very good for that swing trade. Very small, guys. I can go a lot heavier on a lot of these swing trades, a lot of these call credits, call debit spreads, the put credit spreads. I can go a lot heavier, but I'm trying to do. The reason why over the last 2 months, I've started with the call debit spreads and the put credit spreads and the smaller swing trade positions is because I know a lot of you guys are working with a smaller account, and maybe you can't afford to do short puts on something like an Elf Beauty, right? Or, short puts on companies that are $150, $200 and more. So I want to give you guys a little glimpse of what you can do with smaller positions and still generate decent ROI for the size of exposure that you're running, right? So that's the nature of the games. I could go a lot heavier on this EVVTY trade, but I show you what you can do with just $1,000. We're already up 4.5%, just a few short days of trading, right? Google, we still have Google, got assigned at 170 a few weeks ago, currently trading for 165. We have the 165 calls for next week. We got about $1.57 in premium for those. So we'll see how those work out. But if ever Google pulls back more, I could just close these covered calls and reset a little bit lower. So we'll see how Google goes right now. This next one right here, HR Block, we had these for earnings as well. This one is completely worthless, so we'll be pretty much, this will be taken out of the account. HR Block well above $56 level right now. So another earnings play that worked out well. Intel, the $30 calls for December of 2026, 2-year almost leaps. Those are performing very nicely, guys, up about 10% on those so far. McKesson, still not, above our break even on McKesson, but I like this swing trade. Stop loss is very tight anyways. Microsoft swing trade working out nicely. The bull call debit spread on Microsoft. This one we opened a long time ago, guys, before the sell-off even started, roughly about a month and a half ago at this point. We'll keep it and see if Microsoft can get back up there. If not, we might be able to close it for a slight loss. These OXYs are for December as well. A lot of time left on those. 56 puts. This was in the top 5 options place for the week. These expire completely worthless, so we get all the buying power back and collect this $21. TLT, $100 calls for May 2025. Those are still doing well right now. UPS, the bull call debit spreads that we put on yesterday, those are actually up somewhat today. Not that much, but still decent. And we have the Visa swing trade down here as well, about a $2,000 swing trade position. Working very nicely on those. We're almost up just about, something like $8, $9 a share right now. So all in all, guys, positions are doing quite well in the account. And then next week, we once again get full buying power back in the account to once again continue putting on those swing trades and juicy put wheel trades, right? That's pretty much everything I had for you guys in today's video. Hopefully you enjoyed that. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also, if you're new to the channel, consider subscribing. Would love to see you back here, guys. We do these videos every Monday through Friday after the close. Man, Lastly, if you have any questions at all on the swing trade strategy, if there's a stock you want to see me analyze for you, technical analysis on something, my thoughts on the recession narrative right now, an options play that you're considering, anything you want, guys, leave it down below in the comments and I'll get back to you usually within the first 24 hours. So take care, guys. I'll see you over the course of this weekend. 2 videos this weekend. Number 1, the subscriber request video tomorrow on the Saturday session. Have a lot of catching up to do on that. And then on the Sunday, top 5 options plays. And then Sunday night, we will officially be launching the Discord for all of you guys out there who are interested. So I'll be putting more news about that coming towards the tail end of the weekend and on the Monday session as well. So thanks a lot for watching, guys. Take care. See you soon and peace.